Sweet. My apologies. On Friday, there was a bit of an error in the class. We did have class, but one of the administrators over at PitView I had set up a distribution list for the class in my advanced market systems email, and they had changed the dist list to some other webinar distribution list, and I felt like I had a normal amount of new students in the room that I didn't know, but I went in and there was a long list, so we did the webinar. I didn't realize that it didn't go out to the right distribution list. I just made a broad assumption, and I know and I didn't receive any emails back because I know some of you had some issues with the education@NuriFX email. Sorry, it's just a comedy. It was not a comedy. It was some errors. It's a pretty quick class on Friday. What we were looking at on Friday was the same trade that we were looking at on Thursday afternoon. And this is one that I just kind of stuck with, was here on the pound. We had that head and shoulders top. We got to close down below. Put my stop above the high, and actually ended the week with a nice little positive trade. We finally got that reversal in the pound that we were looking for, and that was the only trade from Friday. So as long as you it shouldn't have missed much, because as long as you paid attention on Thursday, that was one of the ones we were looking for. And again, my apologies. Did do a class. My bad. I mean, I just saw a bunch of people in the classroom and wasn't paying full attention as I should have. And of course, the education@NuriFX email seems like has been returning emails to you. We went through that transition of getting the whole website transitioned over to Google. And let me give you an email address, steve@NuriFX.com, because I'm doing this email as my personal one, so that we can do another email address that goes out of education@NuriFX that my partner in crime can use for more administrative purposes. If you could, that should be all set up in the Google, and then I have to set up the education box. But that's going to be a new email address to me personally as we transition. The site's already transitioned over. That's why you were receiving pingbacks on that NuriF education inbox. So if you want, send a test email to that just so I know that I'm getting it. But let me just go through and just kind of explain a little bit on the markets today as far as where we're at. Let's see here. There's no real news today. It's a holiday over in Canada. But as far as no scheduled news, the sentiment is still, the Brexit and the FOMC are still up front when it comes to market sentiment. This is something to where that's going to weigh on the markets all the way up until that June 23rd deadline. There's a lot of things being talked about with the Brexit, a lot of fear being passed out. That's why on the pound, we've been looking for more short opportunities than anything. And the FOMC is also up front with the discussion of and it's not a high probability, but still a slight probability of interest rates coming up or being raised again in June. It went from kind of a very low probability to at least some probability, to where it's, some people are pricing in of maybe a 40-45% chance. It's still below a coin flip at that point, but still a chance for it. So those are the two things that are really weighing on the market right now, or on the market's mind right now. As far as trade opportunities go, I'm kind of taking a little bit slower here, and I'll just go ahead and explain. We're still in the midst of dollar strength. With that FOMC announcement last week, we had it's still weighing on the market. One of the big things weighing on the market is the FOMC meeting minutes. You can still see dollar strength. The dollar yen still is trading a little bit higher. I think there's a retracement opportunity there on the yen, to be honest with you. And, you know, dollar Swiss, dollar strength versus the CAD versus the Aussie versus in slight dollar strength versus New Zealand. So I still like the idea of being able to really trade into, you know, the sentiment of the market, which is, you know, the FOMC, which there is some FOMC members talking this week. St. Louis Reserve President, I know, talked in Beijing this morning, kind of just reiterated a lot of what came out of the meeting minutes. So we're looking at, you know, the possibility of more dollar strength here today. And so there's several different trades I think you could go with. You know, I'm going to start over here with the euro. Euro started breaking down here this morning, almost on a London breakout trade. It closed slightly. I was looking at this 112 level that was right in through here, because right at 112, there was, you know, that's where it was bouncing this morning, and we're just now making a breakout below that 112 level. However, I think it's safe for us to go actually more towards this low and look for a further breakout to the downside, because the euro and the pound, I think both could present opportunities today. You know, I took a profit off on the pound last week, so I'm kind of giving it, I don't want to give it a rest today. I think there's still opportunities we could look for as far as momentum and retracements. On this euro, what I would like to do, because it has been in such a tight range, and I think it could have some continued weakness around it, is I want to wait for it to, you know, even though it's broke down below this 112 level, you know, maybe wait for it because it found support over in here. On the daily chart, let me go to the daily chart. You can see the euro has almost broken down over that. We had that long-term kind of set of higher highs and higher lows right in through here. And on the daily chart, you can see it's just now breaking down. And you see that, you know, that long-term, it's not really long-term. This was just really a bounce right in through here. But I would like to see it break down below this level before looking for a short opportunity. Yeah, I think it can get there. So the euro, you know, one of the things on the whole Brexit scenario that's starting to come up is, you know, if Great Britain exits from the euro, could other countries be behind it, you know, follow in suit? So I'm going to look for a sell entry on this euro. There's a little bit of a divergence here because it's still being well bid, but I think there's a lot of euro pound action going on. So I think on this one, all you need is a close below the previous swing low, the low from the previous week, right in through here. Let's see, what is that low? Low 1.11790. Yeah, the London, Will, you mentioned the London momentum. Yeah, there was a whipsaw in there. That one was unfortunate. I didn't take a London momentum. Because I had a swing trade on it from last week. So you can almost afford to put in, if it can, you know, depending on where the close is, you can almost afford to put in like a 40 pip stop or so. And then still look for a limit of 1 to 1.5 risk reward. Or limit 1, limit 2, which means 1 to 1 risk reward. Move your stop to break even if you're doing more than one lot. You don't really have to look for if you're using PitView, those PitView traders out there, you don't necessarily have to look, it's already been to a +5. You don't necessarily have to look for this to be positive. You just have to look for it to go negative, if you will. So I think this can make a little bit of a break to the downside. even though the LP trend line's been pointing up, all you need is really, if it goes negative, it'll be breaking down below this low. And still overall, it's been up. It's almost been in a divergence mode since then, but a lot of the bid and ask activity, and you have to kind of understand it in a little bit closer way, has stemmed from the selling of pounds, like euro pound. It seems like people are, as the pound has gone down, a lot of money has flowed back into euros. So EUR USD. There's a several dollar strength opportunities I would like to look for today. Whoops. That's my webinar information. Where did that come from? I guess I should snip this. Snip it. And of course, you could also look at the dollar Swiss for the same opportunity. Like on dollar Swiss, you'd be looking at this high at 0.99263, to where you could put your stop probably a little bit tighter, just below the 9,900 level. This one's already +5 on the one, or close, you could say close above the high. And you could probably put your stop much tighter on that one, to where you could put it right below 0.98946. That Swiss is approaching parity with the dollar. It's actually been much weaker than the euro as of late, even though they make kind of the same types of moves. The Swiss has certainly been one of the a lot weaker than the euro as far as making better higher highs and higher lows. And don't worry, we will look at the pound here. And the pound right in through here. It's kind of an interesting one here on the pound, because this one, the one thing on the pound that has kept me a little bit on edge a bit, yeah, pound's been, I think it kind of came down to this 61.8, and this is not, I wouldn't consider this really a Gartley, but it's retracing back to where these previous lows were back in here. Now, if you remember last week, you know, what caused the pound to go up? They had great employment numbers, they had great retail sales numbers, and for a brief moment on several days, you had two news announcements that kind of led the charge on the pound of the pound getting stronger. You had some new, you had the employment numbers, the retail sales, all of which were, were positive for the pound. So I was looking right in through here at, ways to trade into, generally either trading into momentum or trading into retracements on the pound, not going long on the pound. I don't think, the pound is not one that until after June 23rd, I think we can look at kind of aggressively trading into momentum and retracements, if you will. For example, when you kind of look at where this high is, looking for retracements, if it comes back above that high, that could be a short-term retracement we could look for. And momentum, I was actually looking for momentum more towards just choosing out I wanted to see if we can break down below this 78.6 level. Then I think we can make a run down to the lower edge of the 100% retracement, because I think the pound has room to go. This is another one that on the daily chart, you can kind of see here that, there's not necessarily a trend line to speak of, although it did kind of, let's see here. No, it's got plenty of room here. Here was where the trend line was, 1, 2, on the daily chart. It's kind of broken down below that trend line. It's kind of been skirting it there for a while. And then long term, almost making the semblance of a Gartley pattern here. I don't think it's going to see that high again, but it could. I'm very bearish on it as far as the pound goes, but it looks like it's starting to turn. It broke above that long-term head and shoulders pattern, that inverted head and shoulders pattern, kind of broke up above there, and has just been kind of consolidating up above that level on the daily chart. So the long-term support and resistance levels are not as defined, if you will, are not as defined just because, of the uncertainty surrounding the pound. But it's hard not to want to be bearish on this, just because from a fundamental standpoint, people have literally been saying, okay, well, the pound, they say the sterling, if they exit the euro, could go down upwards of like 14 to 15%. 15%, a 15% move on the pound would be what, about 2,200 pips. But the thing is that, remember, there was a situation, what was it, the Scottish deal, right? The Skexit or whatever it was, when we were looking for the vote from the last elections over in the pound. My memory's a little shaky here this morning, but we were looking for the same type of volatility to potentially hit the pound. And in this case, what we're looking for is, there's still fear that's driving the market. And on the pound, what I would like to do is I'm looking down really right at this 144.50 level. If we wanted to do a shorter term play of momentum on the pound, I was looking at this 44.50 level because it's just beneath that 100% retracement as far as a momentum trade goes. Because you can see how consolidated it is right down and through here. And then on this one, you don't really have to look that far for a stop order. You could put your stop really above, it's kind of been bouncing at this support level right in through here. And truth be told, I was looking because I saw it breaking right towards that 78.6 level. So I'd like for it to get some clearance below that 78.6% level, because I think it can make a run at least to the lower range of the 100% retracement. And if it can make a close, I don't think you have to risk that much on it. In fact, I think you could put your stop right up above the swing high. Which in this case, since it bounced, lower low, lower high, you know, it kind of came right up in here and kind of made a bounce. Put your stop right up above this high, right up in through here, almost like a 3-bar reversal. Not quite, you know, because this one's an inside bar. But if you can get above that swing high, London momentum, it barely broke out above London momentum before coming down, so it had a whipsaw trade on the London momentum strategy. I don't think necessarily you would look for a limit. On this one, I would just look for a limit of 1-to-1 risk reward to see if you can get down below to the lower range of 4,400. If you wanted to look for a higher risk reward, you could look at perhaps like a limit 1, limit 2 scenario. Okay, let me just do that real quick. Whoops. Lost my connection there for just 1 second. There we go. Sorry about that. And then from a retracement standpoint, I think we just look for, you know, the whole point of looking at retracements is really to say that, you know, if there is any profit taking on the pound, then we don't really want to, trade in anything to the upside. What we want to be looking for is just kind of going with our gut feel on the pound and saying, okay, well, if it comes back above here, if it comes up here to this 78.6% retracement level, if there is some buying pressure that comes in on the pound, to look for, and I might be a little bit more aggressive on this than normal, even though it would be right by the 4,500 level. But just look for a single bar touch and close off the 78.6. If we can get anything that comes up to this 78.6 level, I would like to set something up on here to where we can, you know, to where I think we could get a little bit better risk reward scenario going on. Meaning, out of all the ones that I would trade today, this is probably one that I may be the most aggressive on as far as looking for opportunities. I think the whole point on the pound is until we get past June 23rd, perhaps going into more of an aggressive. You know, of course we'd want to look out for news announcements. You know, any type of scheduled news announcements, because we tried to do that last week, but you know, we were, you know, we got whipsawed because of, you know, based on scheduled news announcements that kind of created a little bit more bullish tone in the pound. So this is one that I would continue up until June 23rd of aggressively looking at it, almost like we did the dollar for so long. You know, whatever it takes. You know, think about momentum, think about retracements of shorting the pound. And one of the reasons why you would want to look for that is because fear is a powerful driver of the market. And, you know, some people might be looking to trade some type of news trade, you know, as we get closer to June 23rd on the actual June 23rd referendum or whatever that's coming about. But, you know, in my opinion, that the pound would, you know, there's a possibility the pound could sell off before then. You know, not by that 14-15%. That would, majority of that would probably come into play should the vote come out in the direction of, you know, of a vote to leave the EU. You know, that would probably cause the big precipitous move. But, you know, you could easily see on the pound of, you know, where might traders take it. And here, let me just take some of these objects off the list here. Where might traders take it? There we go. That's kind of more of a comfort level. And it has plenty of room to go. You know, if it were to come down to like this 140 level, that would probably be a very comfortable place for the pound to be when it comes to that vote. You know, as far as just traders possibly not necessarily taking it down to where the yearly low has been, but, you know, taking it down, you know, into this middle range of the 140 level or whatnot. So I think that's where, you know, that's definitely where we could be looking on the pound as far as our support and resistance levels go, is like that 140 level, which was right around in here towards these lows. Like this low right in through here was right at 140. I think that's where we could get to on the pound should, you know, in the short term anyway. And I definitely don't expect it to be making any higher highs. And then I know I'm going on a dollar strength kick right now, but the other one that I would look out for, let's see here. By the way, global markets are down slightly. There's not a whole lot of volatility in the markets right now. But I was also looking at this dollar yen right in through here. This is another one to where I was actually looking at more of the retracement opportunities, because you can see that it's coming. You know, look out for dollar yen when it comes to retracements. By the way, there's momentum in retracements that you could potentially trade on the yen also. Meaning, if you looked at the yen from this level, you can see that we're starting to make some support here at the 61.8 level. We got a nice little swing move down to the 61.8 level, and it's starting to make a slight bounce off of that. And then if you look at where the 78.6% retracement level is, right above the 109 level, I think that presents a great opportunity there for the yen, as far as if we can get it down there. It's not a Gartley yet, but that 78.6 level down here at the 109 level, I think that would be a great level to buy into the yen at, because it's right above 109. Almost like the pound. So, I mean, momentum and retracements on the dollar yen too. I like the fact that the yen is retraced down this far. But touch and close. single bar, just one bar, single bar, touch and close off the 78.6 level. Put your stop 1 pip below the swing low, 108.703. Which that would be the 78 or the 100% retracement, of course. And limit 1, limit 2 just means, once again, limit 1 is 1-to-1 risk reward. Move your stop to break even. You can look for perhaps more to the upside, but that's another one on the retracements. If we don't get some of these into retracements, that's our best bet really on a lot of these trades to get higher profitability, is taking the shot to get these in the midst of these retracements. And then from a momentum standpoint, let me zoom in a little bit here. There we go. It's had this really extreme trend line to the downside. You can see that trend line coming to the downside here where it's skirting through that trend line. Zoom out for a second. There we go. Now zoom in. There we go. Especially with how sharp it's fallen. If we can get a close above that trend line, that would be another good place to look for an entry level on the dollar yen. It may not come down and hit the 78.6, but if it does make, let's say, a B, a B could be enough if it breaks that trend line and how close it is to that 78.6 level. With how close it is, even if it makes a B, the B could certainly be, come up to this 110 level and challenge it. And if you start to see like an A, B, C pattern start to form, like on this, if you start to see an A and then a B and then a C start to form, look for those Gartley entries at that lower range of 109. But if it breaks through this trend line, it would be forming a B, and we'd essentially be trading into a B. So all of these, in my opinion, which that's all this is an opinion, show great opportunities to trade into dollar strength. And that's what the trend has been. We're not counter trend trading here. We're actually trading along with what the trend has been, and the trend has been dollar strength. So why not look for better opportunities to trade into that dollar strength? That's kind of my call on that, is let's not fight what the trend's been over the last several weeks. The trend has been dollar strength. There's no scheduled news, by the way. There's no scheduled news announcements coming out, so we don't have to worry about any real whipsaw effects when it comes to news. You look at news coming in, it's going to be more of a technical day. We had some PMI numbers come out. Some were positive, some were negative, but you look at what's happening tomorrow, economic sentiment, inflation report hearings, not much there. I mean, not really a whole lot. Even the final GDP, which is not considered that's a low impact event, mainly because the GDP in Germany tends to be pretty good, but that's not what the problem is in the Euro area. So looking out through the week, the only things that really stick out to you is, the Bank of Canada has their interest rate announcement on Wednesday, expected to keep rates unchanged. I'm expected to be a little bit more hawkish. If the U.S. economy is hawkish, I think the Canadian economy will probably be more hawkish. You got the GDP coming out for the pound on Thursday. That probably would be something to look out for because inflationary pressures are kind of weighing it down a little bit as far as their inflation report goes. But that may not, that may not even be a high impact announcement. The preliminary GDP and Yellen speaking on Friday, these two things could cause some fundamental, it's a lot of fundamental action in the market. Yellen is speaking at 1:15 on Friday, and then we got the preliminary GDP coming out where they're expecting it to be a 0.8. Anything that's a positive number would really be good, but it actually came out above expectations in February. And they're looking for a good GDP number, a good preliminary GDP number anyway, coming up on Friday. So from a news standpoint, there's no scheduled news. So all you can do when there's no scheduled news is really trade along with sentiment. And sentiment right now is a weak pound, strong dollars. Strong dollar across the board, really, except if we're looking at more towards the yen there. So we're just trying to trade along with what the trends have been. The one I might keep an eye out for, and I know some of you are asking, what about dollar weakness? Well, when it comes to dollar weakness, this dollar CAD right in through here, which I know we haven't been trading as much. I still think this is an interesting one to look at. Yeah, I can take a look at New Zealand yen. I've been looking at more dollar-centric trades just because that's what the trend has been, but there's never anything wrong with looking at something like New Zealand yen. It's kind of looking at and this is more of a kind of a shorter term. Actually, you can kind of go back to here. It kind of skirts that trend line also. It's not necessarily a trend line. 1, 2, well, these are all kind of bounces right in through here, but the real number here that you would look for is right at this 31. You can see this support level right in through here. I can actually take that trend line off. That's not a very good trend line right in through there. But you can look at this 3100 level right in through here on the CAD. It's a bank holiday, but they also have their interest rate announcement coming out this week. And I talked a little bit last week about where should these currencies be going. Well, with oil going up as much as it has, with the U.S. economy delivering some pretty solid numbers, which is usually also good for the Canadian, it should be going up, or the Canadian, should be getting stronger. But that's not always the case in Forex trading, where something goes to where it should. The dollar strength has also been giving in on the CAD there. If you are looking for potential speculation points on the CAD, and you would have gotten whipsawed out of this, I know I had talked to somebody last week of selling it below this 3100 level, but there's a huge amount of support as it's gotten up here towards these highs. and dollar strength is kind of driving it today. But I would still look for a break or a close beneath this 3100 level. It looks, even though it closed below there last week, I think if you look for a close beneath that, you could potentially get a nice little buy entry. And then, yeah, we can look at New Zealand yen as an alternative, like dollar neutral trade. Then, yeah, we can take a look at New Zealand yen. Used to be one of our favorites. Talking about this trend line right in through here. And I mean, you could give it a shot. This is it's a tough one to look at in through there. So you have New Zealand retracing to the downside. You have yen coming down. If you're looking at New Zealand yen, see, New Zealand's given into dollar strength, so it's been coming down. You have dollar yen coming down, and that's also creating a strong obviously New Zealand yen coming down right in through there. So as low as that. I mean, you would have room to go. I probably wouldn't be a fan of taking this one myself, but I mean, if you're looking at these, it's not surprising that New Zealand yen's made a pretty big move to the downside, because New Zealand's come down only about 50 pips because it's not as volatile. Dollar yen's come down about 90 pips, so this should be about 150, 170 pips of movement or something like that, and that is. So it's already made a pretty significant move to the downside. I like buying the dollar yen into those retracement or momentum scenarios. So I would probably say on New Zealand yen to kind of stay away from that for right now. I mean, it's something that we can revisit, but it's not necessarily a trend line yet because it hasn't, 1, 2, and we don't know if this is going to be a bounce or a break. It's conceivable that you could look for a sell opportunity there. I'm just not a huge fan of that one. I would almost rather, since I'm looking to buy dollar yen into a retracement and actually potentially buy the Canadian dollar, if it were to come down, I would almost look for this for more of like risk on scenarios, meaning like looking to trade it into more of a buy into a bounce. You know, see it's coming down right now and buying into a bounce off like the 78.6 level right down in here. I would probably prefer to trade it in a, it's, for the most part, it's been, except for this little bounce through these highs here, if you kind of zoom out, for the most part, it's been more sideways than anything. So I'm not a huge fan. I'm not a huge fan of selling it on a break down below there. We have 2 places on here. If you go through that swing low, yeah, I'm not a big fan. I'd kind of keep that one off the trading list for today. I think with the way trading's been going the last couple of weeks, I think we need to look at I know we've been kind of living and dying by these dollar pairs, but I think that's exactly what we need to be looking at, though, is, trading into these trends. And that's why I've been looking to, be more of a, on the dollar strength side of things today. And neither of these really look like very good opportunities as far as, looking at for a potential New Zealand yen buy. Even if, dollar yen, if it comes down to the 78.6, New Zealand's already come down quite a bit. No, I don't like that. Yeah, I'm sorry. Just because I don't like it doesn't mean you can't like it, but remember, I'm not right 100% of the time, and in the last several weeks, I'm not right even 50% of the time. So I am certainly not the end-all be-all of super traders. The only thing that would maybe cause me to want to sell the New Zealand yen would be if the market were to tank, like if we started to see the market start to sell off quite a bit, like commodities start to sell off, like the market's just open and they're only down like 10 or 15 points right now, or I think it was 10 or 15 points last time I checked it. They just opened about 20 minutes ago. So, yeah. I still like the strategy of just sticking with what we got right here. Since we're looking to sell dollar CAD, if it breaks through low 3,100, one interesting one to look at might be CAD yen. Oil's down a bit today. For a potential buying opportunity. Yeah, I'm not a big fan of that one either. Kind of rather keep those separate, either dollar CAD or dollar yen, whichever one gives the signal. That's where I would probably keep things here. Starting to get a little bit of dollar I guess you could call it dollar weakness. Not much has been going on. Let's see here, where are we at now? Yeah, the Dow's only down like 4 points, so we're not down that much. Yeah, we're not getting a huge amount of market volatility here. S&P's down 1. We're not getting a whole lot of underlying currency volatility either. All right. All right, go ahead and save the handout there. There we go. Go ahead and give you the handout. Yeah, that's where I'm going to leave things today. Obviously, I got a little bit more of a bias towards dollar strength, but got one little thing in the background for dollar weakness there. Let's see how this goes to start the week. You know, we can always adjust things when necessary, but I'd rather stick with sentiment for today, and then we'll see where things go. We've had a history of not having very good luck on weeks where there's not where there's lack of news, but we're going to give this a shot anyway. So I'm going to go ahead and stop.